Hello and welcome to Upside, where every week we poke you in the eye with the news affecting European venture. Today it is Mads, Lomax and my good self. And on the docket, we're talking about Nvidia earnings. They're in. Ukraine 4 years on. Will it become the largest defense exporter? And other questions to answer on that one. Lots of AI news, as there is every week. This week it mainly looks like safety, disruption, and a bit of naughty distillation. And Europe on chips and quantum. Looks like there's some big moves there. So, gentlemen, how are you? Mads, how are you, my good man?
Fabulous. Just back from a meeting at the, it's not called the BVCA anymore. It's not the British Venture Capital Association.
No, it changed its name, no?
UK
Private Capital. Yes. Just rolls off the tongue.
UK PLC. We'll go with that. What was going on there, Mads?
Meeting some folks from government to discuss what we can do to stimulate entrepreneurship in the UK.
Loving it.
Boost the tech industry and create much more good stuff for all of us.
Do it. Yeah, it is the answer.
Well, I mean, whatever the three things always are, right? It's talent, it's capital, and it's market and customers.
Yeah.
And so, what can government do to help get in the way or get out of the way, in all the right ways?
Give us lots of money, enable lots of money, and then get out of the way. I think the question is, but the answer is a short one. Lomax, what's happening with you, dude? What's the latest?
I've been writing checks like no tomorrow. I need to slow down.
Have you?
I feel like I've learned that venture as a check writer is a real confidence game. And when your confidence is low, you can find a reason to say no to every single investment you're looking at. When your confidence is high, you can write checks perhaps way too freely. So actually checking yourself when you're very confident and bringing yourself up when you've had, some not good news is a very, very, a bit like any, like an entrepreneur running a company, but also just as us as like individual investors or investors in any asset class, I guess. I've been on a high, but I need to probably check myself now and let my partner do some deals.
What was the confidence? What was the uplift? What's the vibe you're riding?
I've been bragging about this investment that I made in 2024 in Bios, the clinical trial software company that just had the most outrageous 2025, just raised a monster Series A and is even kicking on since then. So I guess it just like when you write something that at the time looked quite contrarian as an investor and it goes right and it goes very right, you get confident, which is great. Good. I think,
Bit of the Bay vibe. You're bringing the Bay vibe to Lisbon.
Yeah, it's like when you play golf or whatever, the hole just looks a lot bigger, or
when you're in flow,
tennis,
man,
the ball looks a lot bigger.
Good for you.
Yeah.
Well, we're going to talk about other companies that are in flow. I think the biggest company in the world, Nvidia, their earnings are in better than expected. I guess we were expecting better than expected. I mean, Mads, this is your place, but stock slightly up at time of press. I don't know where it will be by the time this pod goes out, but it was slightly up time of press. The data center rev was the lion. It climbed 75% from a year earlier to 62 bill, about 91% of total sales. But what does this mean, Mads? What's the story behind the story on the Nvidia earnings?
Well, they've sort of created a rod for their own back because, Jensen Huang, he's just created this phenomenal juggernaut that once again beat expectations and beat earnings. And they've done that now. I think it's 14 or 15 quarters running. So it's the gift that keeps on giving. They always come in above. And yet they were only up sort of 1.4% yesterday. And actually they're down today alongside the market. So how can that be? How can you create such fantastic results and still not kind of have a share price jump? The truth is, as you say, we've come to expect that they'll beat numbers. There's sort of been whisper numbers in Wall Street, and they were sort of, already built into the expectations to some extent. And then we've also just had a really difficult week in the markets. We've got the SaaSpocalypse. We've had, Anthropic trouncing IBM and saying we're going to replace kind of, mainframes by figuring out how to reprogram all the old COBOL code into something that's more modern, so people can get off mainframes and onto something else. You have SaaS companies have declined, CrowdStrike. You've had Blue Owl on the private credit side, They've been doing a lot of credit to and lending against recurring revenue of SaaS companies. They've had to halt redemptions. So there's sort of been a really bearish sentiment in the market. And I think Nvidia's just run into some of that. It's like, even though they are doing what looks like, it's phenomenal business, people are like, it's just not enough. We need more. So what's going to happen with Nvidia from here? Well, that's anybody's guess, of course. The bull case, if you want to take that, is they're actually only at 16 times the forecasted 2028 earnings, right? Which feels cheap.
Not crazy. Not crazy.
If growth can keep up, or 2028 is a couple of years ahead, growth keeps up, this is not an expensive stock at all. You've seen the Vera Rubin samples, kind of the new processor. They're shipping now, production, H2 2026. Inference is a 10th of Blackwell. So incredible upgrade on the prior generation. China is right now at 0 in their model. So there's pure upside if they can fix kind of these export rules. And the networking business is just firing ahead. So, NVIDIA looks as strong as ever. Now, on the other hand, the bear case, and this is kind of what some people are starting to say. We've talked about it for a while. NVIDIA's got these phenomenal margins, right? 75% net profit margin, unheard of. Now, what can eat into that? Today, it used to be that training was all the rage. We bought all these GPUs to train models. Now, inference is making up a whopping proportion of the market. I think it's as much as 50% of all GPUs now are used for inference. NVIDIA is still differentiated there, but maybe not as much. You've seen the ASICs, kind of the custom-made chips from the likes of Google with their TPUs, Amazon is making their own chips, Meta is making their own chips, Microsoft's making their own chips, everybody's making their own chips. And today, these custom ASICs, these custom chips are 10% of the market. So what will happen to NVIDIA's margins as that percentage goes up? Because it will go up. Can they sustain the high profit margins? That's really the question people are asking. So, there's a bull case, there's a bear case, but clearly right now, today, as the time of speaking, people are in a bearish mood and the stock is getting punished for another blowout quarter.
Interesting. Lomax, what would you add?
No, Mads has totally covered it incredibly well, as always there. But I would say, look, I think it's the market being in a bearish place at the moment. But also, I think people are just like, yeah, so what? We know. It's like, well, the 3-4 weeks ago, the big tech companies came out, forecasting 800, 900 billion of capex this year. Where does that capex go? Well, 40 to 50% of it goes to Nvidia. We saw what happened with ASML, I guess upstream of Nvidia with the record orders that they had in their Q4 earnings report as well. Like this is already kind of priced in. But
there are also obviously stories of a lot of that capex not actually being spent. So maybe there's also a little bit of element of actually,
which ties into the bearishness generally, I guess, of what people how they're thinking. But ultimately, I think now with the whole AI build out, I think the ASML, the Nvidia, kind of the infrastructure elements to the AI build out, people are just like, yeah, so what? We know. Now the biggest question is, are people actually going to pay for? Is Anthropic's top line? How's it going to get to 250 billion from, what is it now, Mads? 15?
Well ahead of 10. Yeah. No,
Okay.
Between 10 and 12.
How's it going to basically 10x in the next 3-4 years? Yeah. That's the biggest question. And if that doesn't stop,
Well, the juggernaut can't go on forever. But I think, how many quarters was it, Mads? Did you say it was 14? How many quarters?
Yeah.
That's a pretty chunky, pretty chunky run.
And the forecast for their Q1 is pretty bullish too. Now I think it's over 75 billion for that quarter, which will then tip them up to over 300 billion for the first time, run rate. So
that's nuts. That's totally nuts. I want to change tack completely and talk about Ukraine. So Ukraine is 4 years into the war. 24th of Feb marked the anniversary, which is 4 years since the Russian full-scale invasion. Now, this was a defining geopolitical event that set Europe on its current path: rearmament, sovereign capabilities, the transatlantic disentanglement, all of the stuff that we cover on this pod. Now, we wouldn't be talking about this had the war not started. And having spent a little time in Ukraine last year, what's been on my mind beyond this horrific human tragedy is what's changed at government, at infrastructure, at the commercial level, and what will remain once the war is over. So a little bit of context just to kick off the conversation. This week we saw Frankenberg and Titan both raise 30 mil. So they're two European air defense startups. Same thesis, air defense, it must be cheap, it must be fast, it must be highly available. The NATO Innovation Fund backed them. Now, a semi-question, but we'll come back to it, is this the institutional money into defense tech we've been waiting for? There is also the 800 billion euro rearm Europe plan. EIB's defense spending quadrupled to 4 billion in 25. More broadly, Ukraine is pivoting from the recipient of aid to a strategic capability supplier. Ukrainian defense tech startups raised 105 million in 25, roughly a third of all European early stage defense tech capital. Now, a bit of context there, but Lomax, I've got so many questions around this. I guess the first one is something around, is this defense wave real or still mostly announcements? How would you break it down?
I think we're at the beginning of a secular shift here in Europe. So there's not only what's happened in Ukraine, which I don't think you mentioned, is also what's happened in the White House, right? And I don't want to maybe dwell on this because we've talked about this a lot before, but we've had the invasion by Russia of Ukraine, and then we've had Trump coming in saying, look, this is not going to continue. We're not going to continue underwriting. You've been underspending on defense and in Europe, and the US is not going to continue underwriting that anymore. So you guys have got to get your act together. You've got to increase your spending as a percentage of GDP on defense. You know, historically, the European countries have lapsed down to 1.5% of GDP. Remember that the NATO target was 2%. Now we're all talking about a 5% target by 2035, right? UK is trying to get to 3% by the end of this parliament. But ultimately, these numbers are changing in a kind of secular way. So I think from a defense spending point of view, that is only going to continue. Now, just think historically, the US would spend roughly $1 trillion on defense. Europe was spending about a quarter to a third of that. That gap is going to, well, the US may continue actually to grow, but the European and the UK defense budgets are going to go from something like 300 billion to 600 billion over the next 5, 6, 7 years, right? So that is a big seismic shift. Now, don't forget, that's total budget. And that includes everything that goes into personnel, recruitment, barracks, logistics. Only a small percentage of that goes into technology, which is obviously our world. But let's say 5 to 10% of that goes into R&D and technology. There's a few things that are colliding. We have the threat of Russia, which isn't really going away, obviously as evidenced by Ukraine, but also potentially threats to other states on the east of Europe. We have the US's statement of intent around no longer underwriting European defense. And then we have the technological shifts now, AI, autonomous systems, etc., that require effectively ripping out and replacing a lot of the old instruments of war that we've had before. And I think we're only at the beginning of that. If you actually look at the numbers, investment into defense tech in Europe in 2019 was $100 million per year. Now it's like last year it was 1.5 billion. So we've gone up, 15 times in 6 years, right? As a result of all of those things. Now you have lighthouse companies. You have Helsing, valued at 12 billion, raised 600 million last year. You have Stark Robotics. You have Quantum Systems that are both raised, at least $100 million rounds last year. So you have companies raising real money. Those companies are also doing deals with governments now, very early, right? They actually, if you look through the details of the number of UK and European defense tech companies that have actually signed seismic deals with the European government, it's actually quite small at the moment, but it's going to happen. And actually, once these policies have been put in place, they kind of, defense spending is expected to grow, 10% year on year over the next 7-8 years. So I feel like that is an opportunity for startups. A little bit of cold water, but perspective is that the US is also doing this in a big, big way, right? And Dural now, the kind of their own lighthouse, new prime, new tech, defense tech company, is in talks to raise a $6 billion round at the moment. They raised a $2.5 billion round, I think, last year. So the numbers, again, it's like reminds me of OpenAI and the LLMs. Like the numbers are very, very different, Europe, US. But if you just zoom in on Europe, there are opportunities here. Now, I think finally, as a venture investor, I often think about this because I have made investments in defense and I have made investments in dual use. Is one of the worst things you can do in venture is start writing checks into things that I call, current soup du jour. It's like investing in health during COVID. It's investing in the current thing. You want to be investing 3-4 years ahead. And one thing I'm still trying to figure out is, in defense, are you at the risk of the same thing? But I sometimes think actually not, because actually there's so long to go in terms of the integration of these new technologies, in terms of the re-industrialization of the European military industrial base complex, that actually there is a lot of opportunity there.
No, I mean, thanks for opening the topic, Dan. And I think Lomax talks a lot about sort of the details and the implications, but I do think it is worth just stopping up and considering how different of a world we are in today, right? If you go back 4 years, I mean, we had 2022, kind of Europe, our security was guaranteed by the US. Our automotive industry was seen as the world leader. We had the cheap Russian gas. We were completely reliant on US tech and sort of thought that that's going to remain that way forever. Now, all those things are they're gone now. And at the same time, we have China that's been catching up in an incredible way, both on the automotive front, but also on the AI front, which is kind of the automotive side is terrifying the European industrial base. The AI front is terrifying the Americans. And so the Americans are pivoting out of Europe and sort of, there's this US-Chinese belligerence, and we're still trying to figure out what our response should be in Europe. And I think there's a risk that we are overrun on the manufacturing side and the AI side simultaneously. So the stakes are really existential, and that means we can't have an incremental response. So I think that's the backdrop. The upside, if you will, is that we now have a license to put sort of those luxury beliefs we had to one side. We're going to come back to that later. I think we're going to talk about some of the AI companies and how they are changing their views in one of the next segments. But I think for us, it feels now we now have a license to focus on competition, on actually being the best at something, and not on getting distracted by these other extraneous activities that aren't really creating value, but we're just sort of navel gazing and doing other stuff. So I think that is possibly something positive that could come out of this. In terms of what's ahead for us, so if you think about Ukraine, so we're 4 years in, and Dan, you talked about the incredible human toll. I mean, I think is it 1.8 million people, sort of combined casualties on both sides? And it's just there's not been this level of war that we've seen since the Second World War. I think, it's kind of a staggering number of people dying, and that's a big tragedy. And the question is, how do we resolve it? And I think we owe a lot to the Ukrainians for standing up to Russia, and the least we can do is to support them economically. And the Trump administration has obviously said, the U.S., we're out, and so as Europeans, we're the ones that are left to step up and step in. From what I can tell, the Ukraine needs about 60 billion kind of euros or dollars a year from partners to sustain the war effort. And Europe has been stepping up, but still only about 30 billion a year now. So there is a gap that needs to be closed to be able to sustain Ukraine. Now, the Russian economy is struggling. Growth has certainly collapsed completely, and it looks like they're going to go into the reverse. They've been, spending down of their sovereign wealth fund. The oil price for Russian oil is very low. So there are real challenges ahead, but it doesn't look like this is going to resolve quickly. And so there is a real question of who's got the will to sustain this for longer. And I think it's very, very important that we stay in this and we continue to support Ukraine.
I was reading this week how the Ukrainians are measuring the financial impact they're having on Russia. And I can't remember the name of the metric, but they basically they have like drones that destroy shipping. And so far their run rate is for every dollar they spend on whatever piece of kit, they're destroying $100 worth of Russian equipment. So I think obviously while they're operating at that 100x, I think hopefully there will be a point where the Russian war machine slowly runs out of steam, but I don't know. I have no context for how long that's going to take. but I do hope it's a relatively speedy close.
Well,
But
wars
Lomax,
are basically economics, right? It's,
yeah.
no, I would close like Mads rightly focuses on the terrible tragedy that's going on in Ukraine. I would say if you want to try and take some positives away from this going forwards. So firstly, is Europe has had the wake up call that it needed probably in this regard. And is starting to spend, you look at the European rearm program by 2030, they want to spend 800 billion over 10 years. So that's real money. Secondly is, what's gone on in Ukraine is the Ukrainians are the most up-to-date, cutting-edge. They are fighting a war of the 21st century.
Yeah.
And so actually that skill set, knowledge resides within Europe now, and actually not the US, for example. So there is, if I know Ukraine is not in the EU. It's partly why they're fighting
trying
this
to be.
war. It's partly why they're fighting.
He keeps
this,
asking, doesn't he? Yeah.
But let's just call, Ukraine Europe, and it is very integrated, obviously, in a military level with the rest of Europe and NATO. So I think that, I wouldn't call it exciting because it's probably the wrong word to use, but it's certainly compelling.
Yeah, there will be a legacy. There will be innovation,
well, I know it,
manufacturing,
because as I
startups.
said, from our investments in defense, is they're deeply integrated with these absolutely crack Ukrainian teams, right?
Yeah.
So
yeah. I was in a drone factory last year, looking at some of the tech they were building, and at that point they were buying in all kinds of weird and wonderful stuff from China, from different weird and wonderful tech pieces of kit to construct these drones. It was quite an eye opener. But
on that note, actually, there are two articles worth reading. One is the great article in The Guardian last weekend about the origins of the war and how the UK and the US saw it coming and no one would listen. Not even the Ukrainians. Really good long read. And there's a good article actually in the FT today about exactly what you're saying, Dan, which is around, because one of the problems with defense is also just like scaling up these supply chains and actually manufacturing at scale and at speed. And actually in the context of modern warfare and drones, actually this stuff becomes obsolete incredibly quickly. So,
the rate of innovation is nuts.
So at one stage, you're like, we need to make loads of these things. But at the same time, it's like, really? But then we'll have a stockpile of stuff that's out of date. This is not like, this is not.
And also the Russians work out how to counter it, don't they? So they're using all the fiber optics. They're running 20, 30K fiber optics to run these drones. I was also reading about, I can't remember the name of the thing. They're like 2,000 kilo ships, the water drones that they used to go and basically run at the Russian fleets to sink the Russian ships, and how they've managed to work out how to get short-range missiles to fire from these tiny vessels while they're rocking around and all the salt water going into all the electrics. It's quite amazing stuff, although unbelievably horrific in the same breath. Right, let's talk about, there is a bunch of news this week about, obviously AI is always going to be in our docket. It's super exciting, but this week it's kind of been safety, disruption, some naughty distillation from the Chinese open source models. Starting with safety, Anthropic was founded specifically to be the safe alternative to OpenAI. This week, it updated its responsible scaling policy to say it will no longer delay AI development if it lacks a significant lead over competitors, which basically means safety is now conditional. Your XAI has agreed to an all lawful purposes standard, which is a nice, broad blanket statement. Grok is now cleared for classified intelligence, which scares the living bejesus out of me. Weapons development and battlefield operations. The Pentagon has threatened to brand Anthropic a supply chain risk if it won't lift all safeguards. So a lot is happening on this kind of safety piece. Mads, can you kick off this little bit?
Well, I think it ties in very well to what we just talked about, which is that existential threats change context and that change beliefs. Now, we'll remember Google in 2018, they had this discussion around Project Maven, which was a kind of defense and intelligence project from the US government at the time, where Google employees pressured the company to basically give that up and say, well, we're not going to do it. We're not going to support these things. Now, 4 years later, ChatGPT appears. Suddenly people thought Google might disappear overnight and OpenAI might take their business. And then today, Google has major Department of Defense contracts, and kind of the existential threats completely rewire that moral calculus. And it's sort of, I think, a little bit of an analogy to what's happened in Europe, right? It was a time going back 10 years when we thought, listen, we are so rich and so wealthy, and all the rest of the world, the Americans, they're kind of also wealthy, but the rest of the world is just developing economies, and they'll never catch up. And we can sit here and just sort of think about our regulation and how to be good human beings and not worry too much about competing too hard because nobody can catch us. And suddenly things become a lot more existential, and we're reminded that actually there are some of these survival things that do need to go to the top of the priority stack, because if we forget that, well, it's going to be a whole different conversation we need to have. And now this week, the same has happened to Anthropic, and that's no different from what happened to OpenAI previously. Like OpenAI, they opened out as wanting to be an open company and develop AI to the benefit of humanity, and suddenly they worked out that they were probably on the trail of $1 trillion valuation and a massive company, and all the stakes changed and the calculus changed. And Anthropic is now probably in the same place. They started as a safety first company, but suddenly they have these pressures from all these sides, right? On one hand, you've got the Pentagon, the ultimatum. You have Chinese open source models. The Chinese is possibly distilling on Anthropic's models, and you've got all these the new DeepSeek model that's coming out this month. Sounds like it possibly has been trained on black whales that have been smuggled in, right? So on one hand, you start out having all these good intentions, but then reality catches up with you. And some people will say it's a tragedy. I think it's human nature. When the context changes and we're under these pressures, then the value, the moral compass can change and evolve. And I think that's sort of possibly what's happening here.
It's kind of sad though, isn't it, really, that we're going to end up with this. I find it sad. I know that we're trying to be pragmatic as well as think from the human angles, but it's just feels like we're just taking 10 steps backwards with all this nonsense. But Lomax, you've got some notes on this point as well, haven't you?
Well, no, I'm just it's probably no coincidence that probably only a few weeks after you've announced the new $30 billion fundraising round, that you're now stripping back the guardrails from your AI, right? I think it's call me cynical. And then in regards to the specific point around Anthropic and the DoD, which was that, Anthropic was selling it, had the only LLM model company before Grok, as you mentioned, with a contract into the US DoD for $200 million a year, I think it is, no? And Hegseth has basically said they had two restrictions. One is that the models could not be used in the development of autonomous systems used for offensive purposes, basically without a human in the loop. So drones or autonomous systems that would kill people automatically, or for surveillance of the local population or the US population. And they were kind of restrictions on the use of the Anthropic model. And Hegseth basically got very aggressive and said, if you don't if you don't take those out by, I think it's Friday this week, you guys are out. In fact, not only are you out, but you're a risk. Yeah. You're deemed to be the same level as any kind of Chinese corporate that could be in a supply chain. So very aggressive stance. So for me, that one, I'm like, well, to be honest, Anthropic, if you want to sell software to the US DoD, that's you can't kind of have your cake and eat it. That's a very, very clear one to me. It's you can't sell into the US DoD, especially at the moment, what's going on in the White House. What did you expect? Yeah. And then again, you raise 30 billion. I don't think the investors in that round are going to be happy for you operating with a bit of a handbrake on when your competitors aren't. So I'm just not surprised. It'll be worse than that,
Lomax, won't it? It'll be worse.
I know you call it sad, Dan, but it's just it's pure cold-hearted, commercial reality.
I know, but we've got to be humans as well.
You'll know who'd be sadder than you, Dan. Rishi Sunak, who launched the AI Safety Summit in one of his biggest legacies as a prime minister was launching. You remember at Bletchley Park 2 years ago.
I do. I remember it well.
What happened to that thing? Does that even exist anymore? I think it moved to Paris. I have no idea, but that's
nothing to see here. Move along, please. No, nothing to see here. Yeah. Well,
so poor Rishi is having his legacy eaten away at again. Anyway, so I'm just not surprised.
No, very quickly on your Mads, you raised the Anthropic accusing Chinese labs of distillation. So Anthropic identified 24,000 fraudulent accounts and 16 million exchanges used by DeepSeek, Moonshot, and Minimax, the Chinese open source models, to train their own models. So there is industrial scale distillation going on, which kind of makes me think, well, that's possibly how it's just going to roll. For the Americans spend all this money, the Chinese say thank you very much. They take all these amazing toolkits and build their own open source models from it. So I do one quick question for you, Mads, is at what point is that a national security issue? I know Trump's going to Beijing soon, isn't he? I mean, at what point is that a conversation piece between him and Xi Jinping, or will it just be left, do you think?
I think IP theft is always a national security issue.
Yeah.
I mean, stealing somebody's IP is no different from stealing goods, right? If you walk into another man's store and take his stuff and walk out, I mean, that's a huge issue. If you walked into another country and you start to take their assets and steal them and take them away, that's a huge thing. And when it becomes big enough, yes, it becomes a national security issue. So of course it's an issue. The question is what you do about it.
Won't he roll over? Won't Trump roll over just to try and do a deal?
Well, it depends on what the deal is. But I think with some of the stuff, some spillage is going to happen. The question is, how do you create a system where there's enough mutual respect that you can keep it, you can manage it. If it's all one way, then yes, it's a huge issue. If you have massive global trade imbalances, it's much easier to steal IP than to steal goods. So if the people that are making the goods, they get paid in hard cash, and the people that are making the IP have their IP stolen, that is going to create global destabilization. That's not going to work.
I just wonder, as Anthropic on flavor of the month, positive flavor of the month in the White House, I wonder what kind of conversation they'll be having behind the scenes that will make any difference to Trump. And it looks like, I mean, correct me if I'm wrong, Jens, but it looks like the overall tariff rate with China has come down. So it feels like Trump is almost on a little bit of a back foot and trying to make nice and going and doing state visits. So
well, the problem was they figured out that China has got such a chokehold on the supply chain for U.S. defense.
Yeah. So I don't know. I guess it will just kind of maybe be ignored for now. But listen, on the more positive side, Anthropic Enterprise, same week as all of the challenges that we've seen, but Anthropic Enterprise, they are now looking at integrations for Salesforce, Slack, Intuit, DocuSign, LegalZoom, etc. Benioff and Amadei appear together, talking about Claude for Agentforce 360. This all sounds like, I mean, to me, it feels very short-termist. It feels like the question to the room is Anthropic now a partner rather than a destroyer? I think it's entry point to kill it all off. But I don't know, Mads, have you got any views on this one?
Well, there's always been this discussion. Whenever you've got a new technology paradigm, you've got the infrastructure players, you've got the people that are creating the foundation. Are they going to be able to swallow everything? And sometimes they do, and oftentimes they don't. And companies have been trying to do this before. IBM tried to build an application business, but they found it was really hard. Microsoft has got a decent-sized application business, but still, even with Microsoft's kind of grasp of the global tech ecosystem, they were not been able to become this application provider of choice for everybody. And I don't think Anthropic will either. No single company will be able to provide all applications for all industries. So the question is, where's the margin going to end up? And there will be a huge battle. There will be lots of things to be reorganized. But I do think, fast forward 5 years, you will still see application companies. Might not be the ones we see today. Might be different companies. And there's certainly a lot of AI embedded.
Or people build their own. Or I mean, I can't see this really happening, as you've mentioned before. Or there's just a system of record, build what you need on top.
Yeah, it turns out that building enterprise applications is a lot harder than a bit of vibe coding, as we all know. We can build our own tools and we can do that in an afternoon, and it's amazing. But then trying to roll that out to a company with tens of thousands of employees, with permissions, with data security, it's just a different kettle of fish.
Yeah. Lomax, what else? What else?
Well, I just think stepping back, this is, I think, and maybe we're going to talk about this a little bit later in the pod, is like we're in such an era of change that people do not know which way things are going to go, which is right. And people are running around like headless chickens, and you're seeing that in the market. And then in 1 week you have SaaSpocalypse, all SaaS companies are dead. Then you have a bit of a love-in between Anthropic and the SaaS companies, and everyone's like, actually, agents are going to unlock a tons more value for SaaS companies. And the SaaS companies that, okay, ignoring like very thin, like SaaS companies that don't have like great data, SaaS companies are going to be redeemed and saved by agents now. I think people just don't know where to go. People don't know which way it's going to go. So I think that's, to be honest, it's what we talk about on this pod. It's what we talk about with founders every day. It's what we talk about with investors in our funds every day, right? People just don't know where it's going because it's a very exciting time to be alive. But that's true. We had SaaSpocalypse. Now we have SaaS companies redeemed. And everyone has this bull case for how agents are going to absolutely, improve and soup up existing SaaS products, right? It's crazy, no? Literally crazy.
Yeah, it is kind of, it's funny watching the markets react to certain news or research pieces, and we're going to talk about the
people have come, but you basically got this kind of thesis, which is right. So SaaS is a system of record, AI is a system of action, and this is great. You need the systems of record, and then you have the systems of action on top. So, the winners are the SaaS companies that expose APIs cleanly, control the data layer, own a compliance relationship, and price, well, depends how you price, maybe price on value rather than on seats. But isn't that, I don't know, this is the current thesis that people have. We're now going from, are SaaS companies cheap to are they expensive in the public markets? Because people just don't know. But it's exciting.
We will watch it run from side to side. A little bit on AI margins and cost base, a few anecdotal aspects, and then chime in if it rings any bells. So OpenAI gross margins fell from 40% to 33% in 25, missing its forecast of 46%. Anthropic margins improved 40%, but still 10% short of its own target. OpenAI inference costs quadrupled. Of their nearly a billion users, only 5% pay, and nearly half of all inference costs, which is nearly $4 billion, went on free users. So I don't know if we want to dig into this at all, but how do we see Lomax? How is this going to play out? How is this kind of margin piece and the money actually going to play out, do you think?
Well, I think we're in the same territory as to what we just talked about, which is that people just don't know. So OpenAI and Anthropic, as you said, missed their own margin forecast last year. OpenAI targeted 46% gross margin, actually netted out at 33%. And Anthropic targeted 40% and ended up at 30%. So, both companies basically ended up at 33% gross margin last year, burning cash hand over fist. I think this has been one of the questions of the last, 2-3 years, is where are they going to net out on gross margin? The answer is we don't really know. I mean, they've improved a lot. Anthropic's gross margin in 2024 was like minus 94%, right? So it's already improved a lot. And if it carries on that straight line, then it's to the moon. I think just in terms of the initial reaction to that news is first, AI compute economics are tougher than we expected, right? Secondly, as you alluded to, free users are expensive. That's roughly, free users account for roughly half of OpenAI's inference. Thirdly, maybe they were probably a little bit ambitious, potentially in the context of their own fundraising. But one thing this will do, and this actually probably ties into what we talked about earlier in the discussion today around, well, people already know that the chips are going to, the data centers are going to get built, the chips are going to get sold. They're looking at the revenue of like the AI companies. They're also going to be looking at the margins of the AI companies, right? And actually, this news probably pushes back the profitability of when do these companies actually get to break even, right? I don't know, Mads, I think Anthropic was at one point forecasting break even in 27. No, I think that's gone back to 28. I think OpenAI is more like 2030. But the longer those, so there's revenue numbers and revenue growth. And there's also kind of break-even forecasting. And the moment that if they continue to soften, that is bad news for everything that's going on behind it.
Well, maybe it doesn't matter for now. Maybe this is just kind of keep growing, keep pushing. Look, maybe it doesn't matter for now.
You're right, Dan. You're not wrong, but at some point it's going to start to matter.
Yeah. And also it's push and pull, isn't it? You've got Nvidia at the top of the tree, and then you've got the application layers underneath all of these incredible AI companies and all these foundational models. So That's got to at some point all connect the dots together. I don't know. Mads, any thoughts on this before we move on?
You can't operate a giant tech company at a 30% gross margin. What's that going to get valued at? What's the multiple on that? Doesn't work.
No, but as we know, next generation chips from Nvidia will already have a per token price that's a tenfold improvement over the current model. So we're expecting massive improvements there. I'd say to your point, I think you're right, Lomax, but everything depends on the growth rate, right? Last year, Anthropic grew nearly 10 times, 10x.
Oh, for small base.
I mean, if we, well, it was a billion.
Yeah, I lost. Sorry, I guess in a small base in the context of big tech.
I know you have a lot of portfolio companies in your portfolio that grow from 1 to 10 in a year. But for us mere mortals, that seems like a reasonable growth rate.
Yeah.
Well, thank you so much for the segue into chips, because I want to talk about European chips and I want to talk about European quantum. I guess the broad question, I'm going to give you a bit of context, is should Europe double down on chips and quantum? There's been a lot of movement and a lot of activity in this space over the last year, quite rightly so. European quantum funding hit 1.5 billion in 25, up 170% year on year. 11 billion in EU public funding committed over the next 5 years. Quantum Nation Fund 2, 220 million. I said this was a billion last year. I got this completely wrong. It was only 220 million, but it's double Fund 1. 55 North, 300 million quantum fund. There's a startup, Pascal in Paris, in talks to raise 200 million at $1 billion from a Nobel Prize winning physicist. There are 2 European hardware stories this week. We got one Dutch listing, Accelera. And there is the Finnish quantum computing company IQM that is going public via a SPAC. So it feels like we got some chips, we got some quantum. So this is all good news for Europe. Is quantum genuinely Europe's competitive advantage? Can and should we do more in chips? I kind of know the answer to this already. But Lomax, can you kick this one off for us?
I'm going to cover quantum. I know quantum, obviously, quantum computers have chips too, but let's just leave chips for classical computing to one side for the moment, which we've been talking about a lot today, and talk about quantum. I do think we have a slight obsession around trying to find like Europe's kind of the place where Europe will be the best. I think
it's
like
my
it's almost
obsession. It is my every week I raise the same spec to deny that.
Can I lower the bar?
What can we double down?
Like, let's find a place where Europe can be like not quite as shit, right?
And I'm not having it.
And it might be quantum. It might be quantum for a few reasons, but don't forget, I mean, there's lots of very interesting things going on in quantum in Europe, but there's also lots of very interesting things going on in quantum in the US, in China, obviously, and in Australia, of all places. But let's focus on, yes, indeed. Maybe let's focus on Europe for now and why. Maybe let's sort of talk about the ingredients that Europe has, right? So Europe is absurdly strong at the hard science layer, right? You know, we have world-class universities and institutes, Max Planck, CNRS, Oxford, Delft, ETH, and Zurich, right? We have deep technical benches in trapped ions, neutral atoms, superconducting physics, cryogenics, quantum control theory. And this is why companies like IQM, which you mentioned out of Finland, Pascal out of France, Alice and Bob also out of France, Universal Quantum in the UK, proud investor, even exist at the frontier, right? So that's number one. Like we have a really good hard science layer. The business world, look at ASML. ASML is like a unique company in the world. And actually going back to China and why China may be behind is because they can't get access to EUV, extreme ultraviolet lithography, right? Which is what ASML do. So we know that's true. Number two, Europe is not, so this is an interesting strategic difference to the US rather than like a kind of technical one, is Europe is not betting on a single horse. In quantum computing, don't forget, we're still in something like the 70s when it comes to like classical computing. We are still a long way from having a kind of viable, useful quantum computer that can be used every day. And so we're still trying to figure out which architecture to use. Now, Europe actually has credible teams across the key and core architectures. Superconducting qubits, you have IQM, we just mentioned, neutral atoms, Pascal, error-corrected logical qubits, Alice and Bob, weirdly named French company, photonics, and actually trapped ion, Universal Quantum, again, very proud investor. So that's great. And actually the US is a little bit more all in on superconducting, right? And maybe they're right, which is maybe great, but maybe they're wrong. One other thing that I've noticed, the third thing, is that Europe has done really well at actually using government money to fund quantum computers and become the first buyers of quantum computers, right? The Germans bought a quantum computer from the company I invested in, Universal Quantum in the UK, for 67 million euros, which is an amazing thing for a seed stage startup. And there's a bunch of other those deals that have gone. If you look at IQM, which is this company now that's doing a SPAC, they've also got existing revenue from governments, right? So the European governments, actually, something we criticize European governments for a bit here is they're not actually the first contractor of record for these startups, or first buyer enough, is that they've been doing that, which is great. I mean, the Americans have been doing it too, but I think the Europeans have been doing it actually to quite a large extent. Not the bear case, but the kind of slightly depressing thing, as always, comes back to the same thing. It's money. It's capital. You talked about $1.5 billion being invested in European quantum last year. PsiQuantum, which is a US quantum company that originated in the UK, but whatever, raised a $1 billion round last year. There was something like $4.5 to $5 billion raised into quantum in the US last year. So $1.5 billion sounds like a lot, but it's not enough if Europe wants to succeed. So I think to answer your question, I think Europe is really actually potentially almost best in class in quantum, has amazing teams. I think is at risk of losing some of them, because if they start SPACing, they're going to SPAC in the US and they might start moving their headquarters over there. If people can pull their fingers out and get some more kind of 200, 300, 500 million, $1 billion rounds into these companies, then we might have a shot.
Okay. I'll go with that. Yeah, I mean, IQM is listing. It's listing on the NASDAQ, so we will lose it. But Mads, you're not convinced that this is the right frame, and I shouldn't be so focused on what Europe can win in, right?
No, I mean, it seems to me that should Europe focus on one thing is a bit of a middle power question. And look, I mean, Europe is one of the three global economic blocks that have heavy weight. We've got 16 trillion euros in pension capital. Well, today we're exporting a lot of it to the US, but what if we actually?
I thought it was double that, Mads. I thought it was in the 30s.
It's possibly higher if you add in the UK, if you add in everybody else around it.
Right,
it's a massive number.
Yeah.
And so people sometimes say, look, we can't be the best at every.
Yeah.
It's actual money.
UK has UK has 3 trillion.
Yeah, exactly. Now, people say we can't compete at everything all at once, but people sometimes forget, 25 years ago, China was a developing country.
Yeah.
And today they're competing across the board. I mean, 25 years, it's not nothing, but it's not like 100 years. It's just something you could decide to do and then go after it. We start from a vastly stronger industrial base. ASML we've talked about. You got Airbus, which is the global leader in aerospace. You got all the quantum technology. The deficit seems to be a lack of ambition and incorrect capital allocation processes. So the plumbing of the capital markets rather than capability. And it seems to me that's entirely within our power to fix. Right? You're sitting with all the Lego blocks here. We're just going to put them together in a slightly different way.
Yeah. And I think if you take quantum, we have great teams, as I said.
100%. 100%. So that's my take on it. I do think we've tried with the CHIPS Act to drive more semiconductor manufacturing into Europe, and it's failed because we're partnering with Intel for the sophisticated chips, and Intel is in trouble, and we partner with ASML for the less sophisticated chips. But of course, they're the only ones who can really make the sophisticated ones. And it seems to me that maybe we just need to be a little bit more, should we say, aggressive?
American?
Yeah, you could say that in our negotiation. Now, ASML is a fantastic company. Morris Chang is one of the entrepreneurs and founders of the last 100 years. He's incredible. Love the business. TSMC relies on ASML equipment to do the things they do.
Yeah.
Why is it too much to ask for that they put some of their sophisticated plants in Europe? It seems to me to be an entirely fair quid pro quo. We know that from a supply chain perspective, everything that's in Taiwan is at risk. It is our entire economy.
And what have the Americans said? They got Samsung, you build your fab here. TSMC, you build your fab here, right?
Yeah.
That's happening.
And I just think we should do the same thing, and we shouldn't be shy about it.
Did you see, and this is not a party political broadcast, but these guys,
I wonder where you're going to go now.
Well, these dudes, Reform was saying this week that they want to basically co-opt the roughly 400 billion pounds in local government pension schemes, and they're now kind of managed in a disparate way, pull them together into one big pot and basically force them to invest into
nationalized pensions. Is that part of their manifesto?
Well, it's not nationalized pensions. It's what we've been encouraging Rachel Reeves to do, and what she's been trying to encourage the pension trustees to do, which is stop investing in US bonds or maybe US equities possibly, but actually start investing in local private equity or venture capital. Clearly not too much of a pension into that, but there should be a lot more than we have now.
Gosh.
How does it make you feel on a personal level when the party you're most closely aligned with on a capital markets perspective is Reform?
I got to say, I read the UKIP policy when UKIP first started, and obviously that everyone's going rage on the racists. I read their manifesto cover to cover, and a lot of it was extremely sensible and thoughtful. It wasn't the ragey, what I was expecting to be like, throw out all the brown people. Oh my God, we're going to do this. And, the Daily Mail's going to be our mouthpiece. It was pretty sensible, smart
when
stuff.
You've basically got, especially when you've got an incumbent government that are basically launching business prevention policies left, right, and center, and actually the bar is quite low to create sensible, coherent, investment and business supported policies. No, I'm sure the Conservatives will have a go, but actually,
they screwed the last 15 years before Labour, though. I mean,
it was all right up until 2016, wasn't it?
Yeah, maybe. It just looks we get the governments that we deserve, and until there are smart business people in there who understand how business works. I know Rishi was possibly our great last hope, but unless you have smart business people in office who understand these things, I don't know how you do it. I mean, you can't have people who've never had a job in their life running a department which is making decisions based on how business.
Be careful what you wish for. You get Trump who wants to do a deal. A deal a minute.
Who would it be? Would it be Alan Sugar? Who do we have as PM? I don't even know. I mean,
Matt Clifford, of course.
Yeah. The last thing. This will possibly be a very quick section because I know that it is neither of your happy place. But I want to just quickly talk about the Citrini. The research piece that was done by James Van Gielen and Alap Shah, I think it was, and it was roughly titled "The Consequences of Abundant Intelligence." Now, it is a research piece. It is just effectively a thought experiment posing the statement, what if the AI bulls are right about AI capability? And what if that very success triggers a macro crisis? And then they go into the mechanism is effectively intelligent displacement spiral. So what they're saying is AI improves, white collar layoffs, spending collapses, consumer economy deteriorates. But AI capex continues because it's now the OPEX substitution, not discretionary spend. So we start losing our brains to AI and the systemic cycle completes. Listen, I know that a lot of this doomy stuff is very easy to talk about. It's probably not going to happen in this way, but you've both read the report, Mads, and I know you hate this kind of stuff, but is there anything that you would pull out on either side of the case that you think is interesting? And I fully understand if it's a very, very short segment.
No, I mean, let's take it at face value. So the thesis is exactly as you're saying. The doomsday scenario, AI is going to displace all the white collar workers, and therefore they don't have any money anymore because they've all been fired, and therefore they can't buy anything, and demand collapses, and we're all going to hell in a handbasket. And isn't it just terrible? Now, the steel man of this is that because AI automates cognition itself, so the process of thinking, there's no more work for us to do. AI will do everything. So there's nowhere to redeploy the workers. Even kind of historically, it's always been one kind of job disappears, new business types show up, and people go there instead. But AI is just going to do everything. For me, it just does not seem credible. There is so much work to do. And if you think about two vectors to this, one is the capability and then the rate of deployment. Now, the world is not going to change in 3 or 4 years. We're not going to go from everybody's employed to nobody's employed. That's just, institutions are far slower at adopting and changing. Another thing to think about is we have never been able to predict the new types of jobs before. Right? Social media manager was gibberish in 1995, and so have all jobs been for every single technological revolution that's gone before us. So we've always found new things to do. In so many areas, humans want things from other humans. The relationship is the product. Right? You go to see a doctor, you want somebody to hold your hand and tell you everything's going to be all right, not just talk to a robot. We want teachers who can help, be role models for our children. We want the human contact. And so I think there'll be plenty of things for us to do. But there's no doubt, and this is possibly where the article has a point, is that there will be disruption. And the question is how we deal with that disruption in the intervening period.
I think it's worth a read. I always like these thought experiments just for its very own sake. I don't believe in the doomerism. I don't believe in the accelerationist viewpoint either. I just love the thought experiments, and people have taken time. What was the other report? Was it the 2027 report? I forgot the name of it, where they've set out a thesis over a period of time, and obviously this Citrini research where they've basically posited out 2 years in advance and then done a press release as if it is 2028. I think they're just really, really interesting thought experiments to get my noodle going.
So just linking in something else, because Jamie Dimon, he's obviously incredible business leader, and he's sort of been out talking about what's happening right now with SaaSpocalypse and kind of what's happening in markets. We have seen that Blue Owl, they took a big hit. A private credit company that went public, having lent a lot of money to SaaS companies kind of against recurring revenue that now looks like it might not be as recurring forever in perpetuity as people thought. And so what Jamie Dimon came out to say was, look, there's always a big surprise that triggers a credit crisis. Right? We had it with subprime in 2008, and people didn't think that subprime, it came out of nowhere. That's why The Big Short is such a great read. And like the whole thing was just, it took everybody by surprise. And Dimon's point is maybe software is the surprise that's going to create a credit collapse, right? Or at least a run on things. It doesn't mean that, clearly, after 2008, you fast forward a couple of years, I mean, the economy is sort of back to new equilibrium. It doesn't mean everybody loses their job, but it could be the thing that triggers in the short to medium term some reallocation.
Yeah, it won't be much, will it? And I think I'm right in saying that every crisis we've seen has been credit driven. So maybe maybe it'll be software this time. Maybe it'll be another credit crisis. We'll see. I've got one deal of the week, and it's a super short one. I just want to wave to Wave, who are raising 1.2 billion at 8.6 billion. They've raised 2.5 billion to date. Now, I think the only investor in this round that I've not seen before is Nissan. It's their first ever automotive industry investment in Wave, which I think is great. I love it. Wave, well done. You're cracking it. Go, go, go. Anything else on your mind, Mads, before we clock off?
What's happening in the week ahead? We've got a UK Spring Statement coming up soon.
Ooh.
We've got possibly a DeepSeek model coming out. That's been rumored here for
I thought that was this
days.
week. This is DeepSeek 4, isn't it? I thought that was happening. No.
I don't think we've seen it yet. And so there's the OpenAI $100 billion round, of course. Is that going to close here by the end of the month? And then, of course, as we spoke about earlier on, the Hexeth Amodei showdown. Is Anthropic going to cave or not? So those are a few of the things to look out for.
I think it's a big fat yes, but we'll see. We'll see how much Dario sticks his heels in. But I imagine it'll be yes, please. Thank you so much, sir. We'd like your money. But we'll see. My dear men, lovely. Always a pleasure. Never a chore. Catch you next week.
See you in the next one.
Outside.